Ira Epstein of Linn Associates with your agriculture update for this Thursday, the 5th of September, 2019. We're about 3:05 p.m. Central Daylight Time. Well, one market took it on the chin today, and that's soybeans. We had heard that as much as we're seeing out of South America that they're going through a lot of their beans to send to China, that China's still buying cargoes there, not doing an awful lot with us, and that the amount of acreage being moved for soybeans is increasing to the point where we expect that they're now going to be the largest producers in the world. And of course, I'm probably talking about Brazil there. Remember that. You got Argentina, you got all these countries that are going very, very large in their plantings, and why not? They've got a new customer in town, one they want to wrap up and show that they've got regular supplies. The problem for China is that you still got to buy American. Now, if they don't buy soon from us, that means they probably have enough pre-bought, and that could add more pressure, and I think that's part of what's going on. I was talking to our grain department. That was part of it. As you can see, a strong day in the market, because as soon as you hear that the U.S. and China are having a talk, you would think, oh boy, trade's back on. But I was watching all day. You didn't see the dollar do anything. Metals took it on the chin with the exception of copper, which you would expect be up on that. Pork was down, cattle prices were down, and the soybeans were down. So the markets I was looking at, I'm going, maybe we had some crowded trades in the bonds and the notes because everybody's starting to talk 10 years at 1% and so on. Well, let's get to the grain market and see what's going on. I have one word on my brain called harvest. And we're at the end of the growing season. We're at September 5th. Soon the harvest comes, and when harvest comes, you think you go up or down. Yeah, you'll eventually see what we call the word harvest lows, but you haven't even begun harvest yet. So pressure, I can see that. I can see lack of buying weighing on the soybean market, and you've got the patterns, even on a closing basis, of lower highs, lower lows. And once you got under that 18-week average of closes, you've not looked up. I made an adjustment today. I moved this downtrend line from this point to these 2 points that are interconnecting. And I said, maybe yesterday, even though we got up to that, the way that we fell back to the lower low today, maybe that's an adjustment. What I hate about drawing chart patterns, and always have, is that you can alter them quickly, whereas in swing lines, you can't. And on the swing line, what we had is a false move to the upside that came down, made a lower low, ended that attempt at a rally. That's simply it. Now, I can come back to yesterday. I think you'd agree. Higher lows, higher highs. And we were up here. When I had drawn that downtrend line, we were over it. But that's what I hate about downtrend lines. They move on you. When today's action took place, you can't change what the swing line does. We now have a higher high and a lower low pattern. That's not a trend. What else? 1, 2, 3, 4 out of the last 5 days we've hit the 18-day average, and we're not really trending when we go up over it or down under it. Where could support be now that we think, at least I think, that the resistance area is what I call that line in the sand, the 18-day average of closes? I wouldn't be surprised if 854 3/4, the 855 level, the lower Bollinger Band, offers another level of support. Admittedly, this support was broken and you fell another leg lower. But down here, back here, you had successful tests. The market worked. If you go back and look at Bollinger Band tops, you see how they've done in the past as well, and back here. So I play the percentages. First off, the bias is down. The market's not trending, so I pay attention to that. Then I look at momentum. Momentum hasn't turned down, but it stopped arcing higher. So I have a market that's just chopping traders up. In the meal market, meal is really the whole key to the soybean market. If you're going to have an upward trending grain market in soy complex, meal's got to, in my opinion, be the leader. I've done this a number of years. I don't remember a bull market in the soy complex led by soybean oil. Meal seems to lead it. And in meal, we had a big break day. If we look at yesterday's low in the market, it was 294.30. Today's low, 293.80. So we had an outside day down. As that turns out, you could argue, do you have lower highs? I don't know. I could argue I got the lower low, and maybe today with the arc down. I'm not convinced I know what that pattern is. I will say I see support 293.30, and the 18-day average seems to be the resistance. In soy oil today, the market down 35, so we can say that the first three tests, and I'm saying three if you go back here, all failed at the 18-day average of closes, and now you're back to the 100-day. Is the trend up or down? Well, I drew that this part could be down, but as I'm looking at the chart, I could also argue higher lows and higher highs. Again, a confusing chart pattern. The swing line is definitely in a state of flux. In the corn market, we didn't quite get to that 18-day average. We've come down. You've had the embedded slow stochastic reading, and you know I'm a broken record. As long as that's in play, that's the hierarchy and the chart that takes over, which tells me that the rallies are still being what? They're being sold by the pros until that's lost, and it hasn't been lost. If it breaks down here, 355 could be the next support zone. In the wheat market, as much as you're getting a correction rally off an oversold condition, the overall trend, lower highs, lower lows. This bounce could carry to the 18-day average, where I'd look for resistance to show in the market. In the sugar market, not even a remote attempt at a bounce. You're staying under this 18-day average. You fight against it one time and then you come back. You're riding the Bollinger Band down. And in the process, here you've gotten a market with both numbers in the slow stochastic under 20 today, yesterday under 20, and the day before. That means you've got what's called an embedded reading. So until the red line gets back over the 20 level, which then could lead to price making a run towards that 18-day average of closes, this market is still well within the thralls of the bears, and they're just pushing on these markets. In the coffee market, another challenge, and how many times have I said that line in the sand's been holding back coffee, another failure against that 18-day average of closes. You have an outside day down, so until today's high is taken out, the bears retained control. They lost the element of the swing line. Swing line's got a lower low, higher high. It's not trending, nor is momentum moving up. And as that's happening, the Bollinger Bands are narrowing themselves in, so they're going to take, as this market keeps going sideways, volatility's coming out of it, and that could end up in more sideways action, but certainly chop action. In the cocoa market, the first challenge yesterday of the upper Bollinger Band in a very long time. I realize it gets traders excited, but I'm one to say, nah, that's where I think the pros take money off the table. The first challenge is, and I didn't look too bad today with the market down 24 points from there. Now in the cotton, tomorrow's a very important day if you're going to stay in a chop pattern or start breaking down again. Right now you're in a chop pattern. You're stuck at the 18-day average of closes. You refuse so far to make a run to the upside or the downside that's lasting. And like I was just saying in the other markets, this is the sideways pattern. The way it comes out of here could be very, very interesting. A close under this lower Bollinger Band, bearish. A close over it could be bullish. Got to wait and see what happens with the momentum and all. Don't know yet. In the cattle market, as much as we're breaking down and we're failing against this 18-day average of closes, again, that line in the sand, the first support's right under us. The problem is this market's not getting any bids at all. We're through with the barbecue season, so to speak. So what happens? Well, I think until you get over and close over that 18-day average, you're in a downtrend. First support around 96.85. Feeder cattle failing also at the 18-day average. In my eyes today, when I saw the word China, I'm going, maybe pork knows something. Now it's down 82 points. This is the closest it's got to the upper Bollinger Band. But similar to what we just showed you, wouldn't you call that sideways action? So I wouldn't be surprised if you come down, play around that 18-day average as you wind momentum in here, figuring out what the next real directional trade will be. We certainly had a nice rally off the lows, and we moved about 700 points, which is about 10% of the price. But it seems that the chart is suddenly overbought and into a resistance area. I talk this and a lot more in my reports, but we also have a lot of information for you. Our good friends at the old Modern Trader, I'm hoping it one day gets resurrected, had put together and let us use these different brochures that we put together with them. We made them into cool PDFs, a way that you can easily see them, and it gives you ideas how you work with some of the different trading philosophies that have been around and that the pros generally, whether they get a new name or not, they learn a lot of what this is. Rules to follow, you know that you got to have discipline. That's really the word. Rule is wrong. Discipline is the right word. Because if you're not disciplined, what happens to you in this particular game is you get run over. But if you're disciplined and you learn to leave your ego at home, you have a better chance in most trading vehicles. What do we talk about here? Well, why don't you go to our website, www.iraepstein.com. All you need to do is hit free offers. You'll be taken right to the page you need. Sign up for what you want. We'll get it in your hands. You can click up here if you're watching me on YouTube. It'll take you there as well. Hope you saw me today on Fox TV. I'm Ira Epstein, and I will talk to you tomorrow. Have a good one.